Well, good morning, everyone, and welcome to Monday Morning. It's Stephen Whiteside here from the uptrend.com with your morning market outlook for Monday, April 20th, 2026. In the pre market this morning, we've got crude oil up over $5, and it's been that way since the markets opened at 6 p.m. Sunday night. Gold's down $68. We got silver down a bit, so it's a mixed picture for the Canadian market on Monday. Looking at the major U.S. Index futures, they are all down across the board this morning with crude oil trading higher. They're certainly not unwinding Friday's big gain, so Monday may actually turn out to be an inside day for the market. Looking at the VIX or the Fear Index for the S&P 500, we made a new low on Friday. We need to close on Monday above 2177 to give us a new buy signal. It doesn't look like we're heading up to those levels in the pre-market this morning. And there's the VIX for the NASDAQ and the Russell. And of course, we'll be watching those to see if they turn around and start heading higher. If they start heading higher, that is bearish for stocks. Looking at a couple of the major index ETFs, starting off with the iShares for the TSX 60, they made a new high on Friday, heading towards $50.78. Now, when you look at the iShares for the TSX 60, the current average true range is just 1.14%. So it's important to always compare the percentages, not the dollar amounts, but the percentages, just to see how much volatility you're taking on. And of course, taking on a major index ETF is at the low end of the range of volatility. When you look at the leveraged ETF, of course, we almost double the volatility. When we look at the TD Bank, and banks are usually in the 1 to 2% range when it comes to volatility, looking at the average true range. Then looking at big cap commodity stock, looking at Canadian Natural Resources, we're up over 4%, and that's pretty normal for commodity related stocks. Looking at the Vanguard Canada Total Market ETF, it looks like we may be putting in a double top here. We haven't been able to make a higher high. We're trying to get to 70.38, and that has been a difficult thing to do. So if we can break through 70.38, then 71.88 certainly would come into play. Looking at the SPY, we are making new highs. Now, last week, I was looking at all this resistance here. Yes, we gapped higher, but coming up from that gap, I was expecting that resistance to be a lot harder to get through. I was certainly wrong about that. And also the 700 level, we moved through that. We're slightly above it at the moment. So both areas of resistance didn't work last week. The market was able to move right through. And of course, the first thing we're going to be looking for is a close below the previous day's low. That doesn't guarantee a change, but it certainly gets us to pay closer attention. Now, looking at our next price target, you can see that on Friday we landed on the 710.94 level. If we can start breaking out and moving higher on Monday, which we're not doing in the pre-market, but it doesn't mean we're not going to do it during the session, 726.56 is our next target to the upside. Looking at the NASDAQ 100, again, thought resistance was going to hold us in check. It did not. And so here we are, almost up to the top of our projected trading range on the daily chart up there at 656.25. If we pull out and look at the weekly chart, you can see our next major target is 687.50. So we do have a target above that at the present time. Then looking at the average true range of the Dow, it's currently at 135. Compare that to the S&P 500, where the volatility is a little less. You give the big cap tech stocks a little more weighting in the NASDAQ, you get some additional volatility. And then, of course, if you go to a leveraged ETF, you get much more daily volatility than you would in a normal index ETF. Next up, let's take a look at the world of commodities, and starting off with uranium, which was up on Friday. Looking at a couple of uranium stocks, there's Cameco. It was actually up on Friday, while Energy Fuels and NextGen were both down on Friday. Looking at crude oil gapped lower on Friday, so down 7.79%. It's up over 5% in the pre-market. It did close at the high of the day on Friday, so off the intraday lows and heading higher. And so we may be able to go up and close that gap on Monday. Looking at gasoline, similar situation. We gapped lower on Friday. We're trading higher in the pre-market this morning. Natural gas isn't doing too much. Looking for a close above $11.10 on Monday to give us a buy signal. Canadian energy stocks were down 4.77%. Again, closing near the high of the day. We headed down, hit the top of the flypaper channel. We actually broke the 50-day moving average on Friday. Didn't get down to our next price target of 23.44, but again, closing up near the high of the day. And so we may go up and try to fill that gap on Monday. Looking at U.S. energy stocks, they gapped lower and then came back going into the close. We were still down 2.76% on the day, running into the flypaper channel, hitting the 100-day moving average before bouncing. And then looking at a couple of energy stocks, there's Cenovus gapping lower on Friday. And we've got Chevron gapping lower on Friday, but coming back, almost filling the gap there going into the close on Friday. Looking at the metals, copper made a new high for this move on Friday. It's trying to break out above 37.50. The high on Friday was 37.50. So if you had an order in there, it got filled on Friday. Congratulations. Copper miners moved up on Friday, trying to get out above 87.50. If you had an order in 87.50, it got filled on Friday. Congratulations. Now moving on to gold. Gold was up on Friday. It's down a little in the pre-market this morning, certainly not enough to generate a sell signal. Gold stocks moved higher on Friday. In New York, they're up 2.74%. In Toronto, they're up 3.2%. And the junior gold miners were up 2.85%. Now, when you look at the volatility, of course, the junior gold miners are going to be higher than the big cap gold miners. The average true range for the juniors is 4.11%. And if you look back here, we did break through the flypaper channel and started to come back. And the reason that we found a bottom was we hit the 200-day moving average and started to come back up. Now, the volatility for the GDX, so the big cap gold stocks traded in New York, is 3.76%, so below the volatility of the junior gold miners, which you would expect. And then, of course, the leveraged ETF, you're expecting the volatility to be much higher. Looking at silver, silver was up on Friday. It's down a little in the pre-market this morning. Again, not enough to generate a sell signal. Silver miners, they were up 3.91%. The juniors were up 3.55%. Pan American Silver was up 4.36%, while Wheaton was up 5.29% on Friday and moving up towards the open gap that was created back at the end of February. Almost done. One more stock, and that is NVIDIA. NVIDIA I'm watching very closely. It's come up to the $200 level. It closed just above it at 201.68 on Friday. It would be positive for the market if NVIDIA could continue to hold above 200. 206.25, 212.50 are the next targets to the upside. Currently in the pre-market, NVIDIA is trading a little below 200. Of course, the first thing we're going to be looking for is a close below the previous day's low. That doesn't guarantee anything, just gets us to focus a little closer on what's going on. Okay, folks, that is all for this morning's presentation. It looks like the market wants to do a little selling at the open on Monday morning. It's certainly not enough to undo what happened on Friday, so we, again, may see an inside day on Monday. Have a great day. Next time you'll hear my voice is on Tuesday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.